Welcome, Sander.
Thanks for being here. Thank you.
So this panel is the geopolitical play, but before we get into that, tell us a little bit about what Hudson Bay Capital does.
Sure. Hudson Bay is a global investment manager. We have offices around the world. We practice holistic investing using multiple strategies.
And assets under management about?
We're about 20 billion under management.
Great. Okay, so your firm was really early on predicting the trade, the tariffs, and the trade war, and we're right in the thick of it now. So since you were early on predicting it, how does this play out? Where are we going to be in 2 or 3 years? Give us a rundown.
Right. Well, I don't even think that President Trump knows where we're going to end up, because a lot of this depends upon our trading partners and what they choose to do. But one thing that I think the American people need to know is that protecting the economy is securing our nation. That when you're up against economic competitors that can use state capital, they have markets that dwarf ours, it gives them the ability to target any industry that they want and to dominate it. The Chinese cars, for instance, are great. The Chinese cars are less expensive, they go faster, they go longer. About 1/3 of cars being sold now, I'm told, are Chinese. They can do this in any industry. And so we really need to think about protecting our supply chains. We need to think about the long term. And this trade policy is not about the next 5 years, because it's going to take more time than that to recover our industrial base. But it's about the long haul and what's the end result. And history has shown that a strong economy corresponds with a strong military. So ultimately, when you're up against regimes whose goal to stay in power is to support their economy, they need to continue to get the raw materials that they need to power that economy. Ultimately, that means conflict. So we need to head that off early to make sure that we can defend our country by maintaining a strong industrial base.
You said on the prep call that you felt that the Midwest had been decimated by globalists, and it's now a wasteland. Do you believe that the Midwest, that industrialization will return to the Midwest? And like, how will that look? And what are the opportunities there? Are there opportunities for investing?
Well, I think the Midwest is already starting to see benefits from Trump 1 administration. And as I said, it takes time. And I think it's going to continue to grow. And I think that this is one reason why President Trump is in office. If you look at the map, the Midwest, 10-2, voted for the president. So I think you're going to see a lot more growth in industry continue in the Midwest. I'm a Michigander. So I remember when I went to school on the East Coast, and it was like a completely different world, something I hadn't experienced. On the East Coast and the West Coast, people think globally because there's more interaction with the rest of the world. In the heartland of America, they want to, provide for their children, have a good job, and live peaceful lives. And the globalists, to a certain extent, have sacrificed the Midwest for this other perspective. And I think you're starting to see the boom now in the Midwest.
But I mean, Ken Griffin was on before, and he didn't feel like, he felt like we didn't need to bring back like low value added industrialization factories. How do you see it kind of
we don't need to produce T-shirts to secure the country, for sure. But, defense manufacturing, construction, electricity, semiconductors, steel, aluminum. A lot of these industries are going to benefit under the Trump tariffs.
And do you feel like is that investable now, or are there ways to play that now, this kind of return to industrialization?
Well, time frame is difficult, but I'm very confident that these industries are going to continue to grow, and I think that region of the country is still relatively cheap compared to the coast, and I think you're going to see a transference. Just like with COVID, I think that the disparity between real estate in the city versus out of the city, I think has begun a change. I think you're going to you'll see the same thing from the coast to the middle of America.
We just had a panelist on who was talking about how there was a problem with private credit. There's too many private equity firms trying to exit, and he's getting distressed debt buys, credit buys. You are bullish on private credit. Explain, your position and what makes you bullish on private credit.
Yeah, I think we're in, maybe the third inning of private credit, and I think that structurally what happened was when interest rates went up, it turns out that the banks didn't hedge their exposure, which was surprising. And so the government had to guarantee bank depositors. Now, that creates moral hazard. And so bank capital requirements are going to stay high, even if Bessent's going to lower it somewhat for good reason. When my parents in Ann Arbor, Michigan put their money in the bank, they think they can take it out the next day. But in fact, the bank is lending long.
Right.
So it's almost a fraud on the depositor. With private credit, people invest in a private credit fund, and they know that their money is locked up for a period of time, and they're going to be making longer-term loans. So with technology now, we have the ability to do it. Now, it's still very important. Provision of credit is one of the mainstays of the American economy. That's why we are so strong. We have about 4,500 banks. Doesn't mean that the Main Street banks still won't have a role, but private credit is just in the early stages.
So do you think we'll have less banks ultimately?
That's a policy decision. If we go the way of Canada, I think that there will be some continued rationalizations of banks, but I think it's still very important for that local bank credit relationship where they know the customer best, that as I said, is essential to the growth of the American economy.
So you've said in different interviews that you feel like AI is the biggest change in your lifetime, bigger than the internet. Are there ways that that's informing your investing now and the way you're approaching your allocations?
Look, AI is something that I did not think was possible, and it is still not a hard AI, it's a soft AI, so the machines don't have an intentionality. I like to say that AI is like your typical hedge fund manager, where they can speak with complete sentences and put together pretty presentations, but they have no idea what they're speaking about. And, but there's a use for that. There's a use for that for the junior analyst, for document compare. There's a lot of areas. And I think we're still in the beginning stages, so I don't know where it's going to end up. But the one thing I know is that the infrastructure investment in AI is needed. It's needed for the economy, for the national security. And I think that that's going to continue to power the strength in the American economy.
I was listening to an interview you did, and this relates to AI, perhaps. You have a degree from Wharton, and you also have a degree from the University of Pennsylvania in philosophy. But you mentioned that you thought philosophy perhaps was more important to your career and your life than your training at Wharton. So, I guess it kind of relates to AI in that there's a lot of people out there who are training to be computer scientists, and that may not be such a needed profession. Talk about how that was important to your investing.
Well, it's been incredibly significant in my investing. I think it's even more important now, as you alluded to with AI, that studying the humanities, I think, gives you the ability to have a broader worldview, to see how things are interconnected, to see how your position might be wrong, and to understand how other positions might have a real legitimacy that needs to be pondered and should be taken into consideration. And I think that it reduces a bit of arrogance that you're always right when you're able to study philosophical debate and understand how two sides can have both legitimate meanings. But I think it's even more important now with AI, because I think that one of the challenges for young people is how do you separate yourself from the machines? And machines don't have an intentionality. Machines don't have an awareness. So machines can't have that same level of cognition that a person can. And so I think that the philosophy education really helps, or humanities education helps someone to differentiate themselves from the machines.
Great. So bullish on the Midwest, bullish on private credit, bullish on humanities. Thank you so much.
Yes. Thank you.